Welcome to today's edition of Targets in Focus. I'm joined by Sverre Holbek, Senior Analyst at Danske Bank in Copenhagen. Sverre, thank you very much for joining me. Now, pound dollar is sustaining an overnight push above the 160 level after the pound strengthened on the back of stronger UK jobs data. I understand over the coming month you're expecting the pair to break lower and stay pretty range-bound for the next few months at least.
Yes, that's correct. Basically, we look for the pair to stay mostly range-bound on the 12-month horizon. We still think that neither UK nor US economic fundamentals are too impressive, but that said, we think that the Bank of England and also the US Fed are going to stay put over the coming year, and therefore also that we will see cable being range-bound over the next 12 months. The risk here is that if we see an escalation of the EU debt problems, that we could see UK sterling suffering relative to the US dollar. But on the other hand, there would also be a risk on the upside for cable if the Fed engages in more QE. So we think that these risks are going to keep in check, and therefore that we will see cable being range-bound over the coming 12 months.
What about dollar CAD? The Bank of Canada surprised markets this week with a more hawkish tone than expected. In terms of your short, mid and long-term forecast, how bearish are you on this pair?
Well, we are fairly bearish, to be honest. We still think that the Canadian dollar is trading in overvalued territory, but that said, Canadian fundamentals are quite decent. And also we have support of the Canadian dollar stemming from strong US data that has a direct impact through the spillover from the US economy to the Canadian economy, but also a more indirect spillover to overall risk appetite that we expect to stay quite solid over the coming 12 months. And the Canadian dollar is one of the most sensitive currencies to overall risk appetite. So we think there is support to the Canadian dollar from decent global macro data, loose global monetary conditions, providing support to risky assets in general. Finally, we also think there's a chance that the Bank of Canada could gradually turn more hawkish over the coming months, and we think that they're going to gradually move closer to delivering the first hike over the coming months, and then we could see the first hike perhaps towards the end of the summer or in the third quarter.
To end, Sverre, what are your projections for the euro Norwegian kroner over the next 12 months and why?
Our projections for the Norwegian crown versus the euro is 750 on the 3-month horizon, 740 on the 6-month horizon, and 740 again on the 12-month horizon. Basically, we think that the Norwegian crown is going to strengthen over the coming 12 months, given that we think international focus is going to remain on the healthy Norwegian fundamentals. We also think that there could be rate hikes from Norges Bank in the pipeline. So underlying economic fundamentals, very strong Norwegian balances, and demand for Norwegian government bonds are going to provide sustained support to the Norwegian crown. The risk here to the Norwegian crown is that the market is already quite long in the Norwegian crown, and also that we could see action taken from Norges Bank to weaken the crown, or at least to stem the appreciation of the crown. But we also think that the comments yesterday from Governor Olsen that Norges Bank will not conduct FX purchases to cap the Norwegian crown's gains underlines that there are limits to how much Norges Bank can do to actively weaken the currency. So we think that we are going to head lower in euro-NOK, even though it may not be a one-way street. The road lower in euro-NOK could be quite bumpy.
Thank you again, Sverre, for sharing some of your latest FX forecasts. Now, tomorrow we'll have the last edition of Targets in Focus for this trading week, alongside a press review, interviews and, of course, the week ahead. But for now, goodbye.